The battle between the bulls and the bears rages on as we try to decide who is going to take the early lead in this 2024 market. Are the bulls about to lose the trend, or are they just resting before they attempt to push even higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was down 0.32%, and we did get a bearish close down below the rising 20 daily moving average and just barely below this critical support zone right around 467.6. Now, one thing I want you to pay attention to with this price action is that this is going to be a possibility to be a bear trap, which means even though this looks extremely bearish and it looks like we're breaking down, all of this price action happened on extremely low volume, which means we are not getting panic selling and we are not seeing liquidation of the long positions at this point in time. So how you prevent getting bear trapped is very simple. Do not try to short the market and do not expect the market to go lower until we break down below the low from today, which is going to require a breakdown below 467. So what that means is if we do not gap down and we do not break down below 467 early in tomorrow's price action, and we do the opposite and we gap up and hold above the support at 467, then this was likely a bear trap candle, and anybody that shorted the close is going to see a face ripper back towards 475 instead of a push down lower. Now, if we do break down below 467 and confirm this bearish candle where we got rejected from resistance and closed below support, then that's the confirmation you want to continue to expect lower prices, and that means we will likely push down towards 462 and then 458. So very simply said, 467 is your line in the sand for tomorrow, and whether we are above or below 467 tells you whether you should be long or short, or if you want to wait for more clarity, you can simply sit in cash. So 467 is the number you want to pay attention tomorrow. And yes, I do think there is the possibility this could be a bear trap because we had such pathetic volume today and we weren't getting that high volume panic selling that you would expect to see on a bearish day. If we go from the highs all the way down to where we close, we are in a textbook 2% pullback, and sometimes in strong bull trends, which we are undoubtedly still in, you only get between a 1.5 to 3% drawdown before you continue higher. And as I continue to remind you, the S&P 500 did not make brand new all-time highs, even though the Dow Jones and the Nasdaq 100 did. So I am not ruling out the bulls at this point in time, and I actually think the bulls could easily take back control of this market because we're sitting right at critical support and they have been resting and they could be getting ready to push higher yet again. So 467 is your line in the sand, and if we start to bounce from there, do not get overly bearish because it's still possible SPY is trying to push towards 480. On the Nasdaq 100 triple Qs, we were down 0.51% today, and again, we do look like we have a bearish candle closing near the low of the day and giving back a lot of the upside push that we had intraday. But once more, this all happened on extremely low volume and sitting right on top of a support zone right here at 396. So 396 is going to be your line in the sand for the triple Qs, and if we break below 396, we will very likely come down here to retest the breakout right around 391. So 391 is going to be your critical support below 404, but do not rule out 396 because if we bounce from 396, we could easily push higher back towards 404 or that gap fill above 407.5. If we break below 396, we're going down towards 390 to 391. And if we can't hold that, we come all the way back down towards 383. And I also want you to pay attention to the Apple stock analysis that I'm going to do near the end of the video because Apple is the #1 holding in this ETF and it's going to tell you a lot about what the Qs might do next as well. On the Dow Jones, we were up 0.09% today and we did try to push out above that resistance at 376, but we did get rejected and closed near the low of the day, and we're closing down below a -5 EMA for the second day in a row. So it is possible the Dow Jones is trying to roll over, but we have no confirmation until we break down below this support down here right around 370 to 371. In the meantime, it's possible we can continue lower towards the rising 20 daily moving average, which is going to be right around 372. And the next bull breakout will be the break above this resistance between 376 and 377, and then we should start pushing higher towards 383. If we can't break the resistance and we break support, then we're looking for 370, 367, and then all the way back down to 360. On the Russell 2000 IWM ETF, we were down 0.2% today, and I told you there was a good chance we would fully close this gap at 193.64, and there's only about 5 cents left in that gap, so it's very likely that we're going to fill that gap, and I do believe after we fill that gap, we're going to make an attempt to bounce back up towards 198. At 198, we fill the gap above, and if we continue through that gap, then we go higher towards 201 and 203. If we get rejected from a lower high and we break down below this support at 193, then we're looking for retest of 191 and then 186. On the ARKK ETF, we were up 0.8% today as we bounced right around this support at 48, and we do have a gap to fill at 50.2. If we go up and fill that gap and find resistance between 50 and 51, it's possible we get a lower high and continue lower towards the 50 EMA at 47, but as long as we can hold 48 and continue to push higher, it's possible we go all the way up towards another gap fill, which is right around 52.2. So it is possible, even if ARKK is trying to go lower, that we bounce to a lower high before we continue a downtrend. On the VIX, we were up 0.78% as the VIX is trying to close outside the upper Bollinger Band for the second day in a row, which means we could see the VIX trying to climb higher towards 15. And keep in mind, this is completely normal during a pullback to see the VIX going between 15 and 16 and possibly even as high as 18. If we see the VIX getting above 18 and especially above 20, then we're likely getting panic, and that could lead to a full-blown correction. But right now, we are still very well within the realms of possibility of simply just a pullback within a bull trend. On Bitcoin, we're currently up 3.7%, so Bitcoin is showing some risk-on behavior with the price action back above all the moving averages and holding on to that bull trend. And it does look possible to get an attempt at another bull breakout above the resistance, which is right here at 44,500. And if we get that bull breakout, we should start higher towards 47,500. If we get rejected and this is a bull trap, we should see price immediately getting high volume selling from this resistance at 44,500. And if at any point we come all the way back down and break the support to the bottom of the range at 40,000, then we'll be looking for the price target down here at 38,000. But right now the bulls are in control, and I do believe it looks like we're breaking out of the wedge to the bullish direction after a breakout and retest, and it does look like the bulls are going to try to continue to push higher. On Nvidia stock, we were up 0.9% today, and Nvidia did hold that very critical support I told you at 475, and as long as we can hold 475, it is possible that Nvidia is not trying to go down to close this gap at 424 until a later date. So for that reason, I'll go ahead and give you two arrows to follow with a very simple risk level at 475, and above 475, it's possible we're going to push higher towards 504. 504 is the top of the range, and if Nvidia wants to continue a bull trend, it is going to need to break out of this range and break through 504, and then I do believe it will try to push higher towards 600, and we do have earnings coming up in about 2 months, so if we are going to get a bull run into earnings, it could be possible that it starts within the next few weeks. Regardless of what happens, 475 is your line in the sand, and if we break below that, we're instantly more bearish for a retest of support at 454, 435, and the gap close below 424. On Tesla stock, we were down 0.22% today, and I told you that Tesla breaking down below 244 meant we could be coming back down here towards 230 and to close the gap at 225. Another support you should be paying attention to is right around 233 because that's also where we were finding support back there in November. If we can break above 244, then we can get more bullish, but that means we're likely going to start pushing higher towards 255 only if price action can break that resistance at 244 to 246. On Apple stock, we were down 1.27% today, and yesterday I told you Apple is getting very oversold outside the lower Bollinger Band, and we did gap down below the lower Bollinger Band yet again and open another gap to fill at 183.43. And at this point, Apple is 3 days below the lower Bollinger Band, which tells you two things as a price action trader. One, it tells you that we're getting way more sellers than buyers, and even with this oversold condition, we cannot get enough buying pressure to push Apple higher. And that tells you we have a lot of money exiting Apple and not necessarily entering Apple. Now, with that being said, I do believe Apple is going to hold this support zone between 180 and 182, and I still think Apple is going to make an attempt to rally back towards 190 up to about 192. So manage your risk right around 180 because obviously if we break down below that support, then I'm going to be incorrect, but this is a very low risk trade as long as you're managing your risk between 180 and 182. If we break down below 180, that's going to start looking bearish, and we're going to start developing bear trends as we break down below the 200 daily moving average. And that could be an ominous sign that Apple wants to go a lot lower, but we'll wait and let the price action do all the talking. So jumping back over to the S&P 500, it is still very early in the year, and there could be a lot of deception with the first few trading days. And we know there was a lot of profits that were to be taken from that very strong bull run that we had at the end of the year last year. So that there's no surprise that we're getting a pullback. I believe the main question here is whether or not the pullback is going to turn into a deeper correction or whether it's just an everyday pullback before we continue higher towards new all-time highs. So yes, this is a battle between the bears and the bulls as we look forward to see who is going to control the market early in the year. And as traders, I don't think you should care who wins the battle. I think you should let the price action tell you and then simply trade with the direction of the trend that makes the most sense and put yourself in the best risk reward ratios. As long as you're managing risk around these critical levels, it doesn't matter whether you're going long or short. If you're managing your risk properly and you have the proper risk reward ratios, you're going to do fine and you're going to still remain a profitable trader. Don't forget the trend is your friend, and right now we are still in bull trends, which favors buying at support and selling at resistance. We are going to absolutely crush this market yet again on Bang Trade Alerts and the Stocks Channel Discord server. So if you want to join either of those services, you can find out how to do so by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.